This week, I wish to focus on the shape and nature of the economic recovery in Australia. Months into the crisis, economic activity has started on the long, fragile road to recovery as parts of the economy reopen and restrictions lift. The fragile and uncertain nature of the economic recovery is highlighted by the recent lockdowns of outbreaks in hotspots by the Victorian government. The possible shapes that this recovery could take is like alphabet soup. There are the letters L, U, V and W. L means we stay in this downturn for a very long time. U means a gradual recovery. V is a quick snapback to business as usual and pre-crisis conditions. W is a double-dip recession. Our core view is of a U-shaped recovery. Recently, I was invited to be on Bloomberg's Inside Track. Bloomberg conducted a live poll and asked registrants to vote on which letter they thought the recovery would take. U was the winner, but U and W were almost neck and neck. The high probability placed on a W recovery is likely being driven by the recent high number of daily infections in Victoria and rising infections in many parts of the United States. What could bring about a W-shaped recovery? There are two factors that could cause a W. Firstly, a second wave of infections that means we re-enter lockdown, causing economic activity to collapse again. However, the hurdle to return to full lockdown is now higher due to lockdown fatigue and concerns from governments around the economic cost of lockdowns. Secondly, there is the looming financial cliff for many businesses at the end of September when JobKeeper and other key stimulus measures are due to end. If JobKeeper ends fully and abruptly, job losses will re-accelerate and the nascent recovery will be threatened. Higher unemployment means less household income and less job security for those who are employed, causing consumers to be more cautious and pull back on spending. We expect JobKeeper will be extended given the challenging conditions, but the federal government might choose to diminish the size of the scheme or change it to be more targeted. A recent business survey conducted in mid-June by the Australian Bureau of Statistics suggests the financial cliff looming at the end of September is very real for many businesses. 8% of businesses said their operations could not be supported by current available cash on hand for more than a month. And another 21% of businesses said operations could only be supported by cash on hand for 1 to 3 months. Other responses indicated businesses are still facing challenging conditions despite parts of the economy reopening. There is a less conventional shape of recovery which increasingly appeals to us over a U-shape. It is the inverted or back-to-front J recovery. After initial recovery, after hitting bottom, the economy settles into an extended period of bumpy, subpar growth. It incorporates the view that it will be a long time before we see unemployment at 5% again, and a long time before we see economic activity fully recover to pre-pandemic levels and grow at or above trend. Thank you.